Ladies and gentlemen, welcome to this week's version of Nichols and Dimes, our weekly video series. The quote of the week this week talks about presidential elections. I'm going to talk a little bit about the presidential election. We all know it's coming up in the very near future. Whether you're a Democrat or Republican, whether you like Trump or Biden, is your choice, of course. But I thought I'd discuss a little bit of historical perspective and specifically how the market has done in terms of return when a Democrat and or a Republican is in office. But first, the quote of the week by Dean Koontz, who said, "Somebody asked me about the current choice we're being given in the presidential election. And I said, well, it's like two of the scariest movies I can imagine." Now, whether you're a Trump fan or a Biden fan, again, is your choice. Don't get offended by that quote. But the reality is, and I thought this was funny, well, it's like two of the scariest movies I can imagine. So let's look at the historical perspective of how the market is done, specifically in the presidential election cycle, whether it's a Democrat or Republican. And, you know, most people think that when a Republican is in office, it favors businesses. And sometimes when a Democrat's in office, it favors folks tend to get higher tax, and maybe it's unfavorable to businesses in the stock market. So let's look at a historical perspective as measured by the Dow Jones Industrial Average. Now, you may remember or recall that the Dow Jones is only 30 stocks. Okay, so when people refer to the market, sometimes they refer to the Dow. Was the market up or down today? Again, the Dow Jones is only 30 stocks. So a study was done by Kiplingers, and they looked at the election cycle of the last 182 years. This is crazy. You know, wars, bear markets, recessions, depressions. And historically speaking, the Dow Jones has averaged around 10.4% over those years. And when a Democrat is in office versus a Republican is in office, so who's better for the stock market? Again, as measured by the Dow. And I'll actually quote the website Kiplinger because I think they put it very well. So you may feel very strongly about one party or the other party when it comes to your politics, but when it comes to your portfolio, it actually doesn't really matter much which party wins. Again, this is per Kiplinger. Conventional wisdom might suggest that Republicans who are supposedly more business-friendly than Democrats would be more beneficial to your stock holdings. In fact, looking back to 1900, Democrats have been slightly better for stocks, with the Dow up on average nearly 9% annually when Democrats are in control, compared to nearly 6% per year when Republicans are in control. Again, don't argue with the facts. The facts are what they are. But again, my point is just deliver a message here with the actual returns. But normal variations in annual stock market returns can dwarf that difference, of course. So furthermore, another urban legend that's Kiplinger notes, that is, the markets do better when government is divided. The theory behind the legend suggests that divided power saves both parties from their worst instincts. Well, but the theory isn't necessarily always true. For example, in the 2 years following an election, the S&P 500, again, that's not the Dow, the S&P 500, the largest publicly traded stocks in the country, the S&P 500 gained in the 2 years following an election, gained 16.9% when one party controls the White House and both parties or both houses of Congress. So again, the market on average is up, as evident by the S&P 500, up 16.9% when one party controls the White House and both parties control Congress. The market is up 15.6% when one party controls both houses of Congress and the other party owns the White House, and just 5.5% when the House and Senate are divided. But a divided Congress doesn't always lead to subpar returns. In the 2-year periods following the 2010 and 2012 elections, the S&P rose 19 and 42% respectively. So listen, at the end of the day, history is a good indication of what may happen in the future, but of course it's not absolute. With the Federal Reserve, at the stock market's back in terms of, their interest in continuing to stimulate the economy in terms of direct payments to individuals, potentially even helping small businesses even further, even buying bonds as they've been doing, most recently. To that end, if you have any concerns about the portfolio or the markets or not sure what to do, we're happy to give you a second opinion. You can send me an email at cnichols@nicholswealth.com or go on our website at nicholswealth.com. Just click on the services tab, click on second opinion service, and then we're happy to reach out to you. Thanks again for watching. Bye-bye.